Okay, it's 10:32 a.m. September 29th, 2025. Today EA went private. Now they've been talking about this for a little while. I saw rumblings about it on during the weekend. During that time period, that's when I basically became aware that it was possible. Now, how it happened is through like a leveraged buyout type of ordeal. I believe the word that Reuters used was a consortium, and I'm not sure if it was private equity. It feels like it was private equity, leveraged buyout, a whole lot of debt involved, borrowed funds secured against the assets of the target company. That's usually what it is. So anyways, I believe there's new ownership for EA, if I had to guess. We're going to find out. I'm going to check on ChatGPT, and we'll go through some questions that we have that come up. But hopefully ChatGPT can give us some information where I can, instead of reading from a news source, I can go from ChatGPT. But so EA is being privatized, going private, and I do wonder what happens with the shareholders, public shareholders. What happens with their shares and how they are accommodated. So you won't be able to see my screen. Because it makes me kind of nervous. But just for a little bit here, we'll look into this. So I'm asking ChatGPT, what's the news on EA and it going private? Here's what's going on with EA, Electronic Arts, a video game company. They've been making video games for a while. They do a lot of sports games. They're being taken private. EA has agreed to be acquired in an all-cash deal by a consortium made up of Saudi Arabia's Public Investment Fund, PIF, private equity firm Silver Lake. I think Silver Lake is connected to a company I'm aware of, is Permian Resources. It's a gas company that came out or IPO'd in 2016. First it was a blank check company, which was different for the time, but it wasn't rare. It was like a new thing that was happening more often than not. And Affinity Partners, led by Jared Kushner. The deal values EA at about $55 billion total, that's equity and debt, and offers $210 per share in cash to EA shareholders. The $210 share price is roughly a 25% premium over EA's unaffected share price before rumors began. So the rumors began. It's a premium. That's how they kind of do it when they do this type of thing. 20. They add a premium, a sweetener to the deal. The consortium will roll over public investment funds, the Saudi Arabia Public Investment Fund. They'll roll over PIF's existing 9.9 stake in EA into the new ownership structure. The transaction was approved by EA's board, but it's still subject to regulatory approvals and shareholder approval. But, the news is it's gone private. Upon closing, so I guess, I don't know if anything, upon closing, EA's common stock will be delisted from public markets and it will cease to be a public company. EA's headquarters will remain in Redwood City, California, and Andrew Wilson will stay on as CEO. Why this matters. Implications and risks. EA could do things differently because of this. It gives them more flexibility to make long-term investments without the quarterly pressure from public markets. Would you guys say that private companies have a better public sentiment around them rather than public companies? Private companies are seen as better than public for some reason. I don't know. Just as far as, there is a chance, and it's under new ownership, kind of. I don't know if there's going to be changes within the board. The board, so maybe I'm wrong about my first assessment. A few questions come up with this information. So we know the Saudi Arabia's PIF, their ownership amount, 9.9%. There's something about 10%. When you own 10% of a company, you have to do something, I think. So they were under that 10%. I could be wrong there. But the other companies, the Jared Kushner Company and Silver Lake, how big were their stakes in the company before this private deal? I think it would be smaller. I don't know. I don't know what's going on, really. I mean, we're just going to find out some stuff. So more flexibility. EA will have more flexibility. So that could lead to a restructuring, cost realignment, or strategic pivots that might be harder under public scrutiny. So, depending how you see the leadership, and again, leadership might not be changing all that much. And if you disliked them before, maybe you'll dislike their newly acquired freedom from public scrutiny even more so. It remains to be seen. The consortium's global network and capital backing, which means like money and stuff like that, capital backing might enable EA to expand in new regions or invest more aggressively in new platforms. There are some risks, concerns, and caveats. The deal includes $20 billion in debt financing backed by JP Morgan as part of the total value. $20 billion in debt financing. And how much was the total? 55 billion. So equity, cash plus debt. It's less than half, but that is a pretty good amount of debt financing backed by JP Morgan as part of the total value. That leverage increases financial risk because chances are EA already had debt at the time. But since the consortium is purchasing, the debt is on them, isn't it? I'm confused. As with many take privates, there could be cost cuts, layoffs, or reduced transparency. There are no changes that have been announced yet, but these are typical concerns, and usually within the employees, but also shareholders and investors. But now that they're private, they have less investors to worry about. Regulatory approval could be a hurdle, especially given the involvement of a sovereign wealth fund and national security / competition oversight. So the Saudi Arabia thing is a sovereign wealth fund, I believe, and but they already have 9.9%. But the erasure of being in the public markets in America could prove to be a problem for them. Especially with the current administration, Trump just put 100% tariffs on Hollywood movies that are made outside of America. Shareholder approval is required, so some shareholders may oppose or try to block the deal. And it says, if you'd like, I can pull up some analyst takes on whether this is a good deal for shareholders, for gamers, or compare it to other big take privates in the tech and gaming industry. Do you want me to do that? I mean, that sounds all right, but so right now, let's ask, how much time do we have here? 13 minutes. So that's just what's going on here. What's a good question we can answer within a 20-minute time limit? We're already at 14 minutes pretty much. How will this affect their games? This is just guessing and stuff like that. There's no guarantee. You can make some educated guesses. I mean, we could do that too, guys. Just where this might lead. Is it going to be better? Is it going to be worse? There's potential upsides, more freedom for long-term bets / innovation. You're not going to have to do any quarterly results anymore. They could afford to invest in riskier or more ambitious projects. You have longer development cycles. You could take part in experimental mechanics, new intellectual property. And those typically don't show immediate returns. So, and you don't really have to worry about that all that much right now, although you kind of want to see some sort of the press supposedly releases the press release from EA frames the deal as enabling EA to move faster and unlock new opportunities. Now, I can see a public company moving slower. I think there are more moving parts, and that's from an outside area, where the moving parts are from the outside ownership, and you worry a lot about what all these different voices and minds are going to say about you. Supposedly, the second thing is less pressure to cut corners under public scrutiny. Companies sometimes prune features or scope to hit deadlines or targets. Being private might allow EA to do better when it comes to quality versus revenue targets, but it's not guaranteed. Greater flexibility with monetization / business models. A lot of games, and I don't know who makes the FIFA games. Maybe it's EA. And the FIFA and NHL games, you know, FIFA, what's the new one that just came out? Something, maybe it's 2K that is making those games. I don't know. Shoot. FC 2026. EA Sports. So there's been talk of monetization within those games that, you know, people keep on doing, customers keep on taking part in, but the critics really take a stab at that type of business practice. And so the risks and there's some other positives, but just some risks. There'll be cost pressures and debt burden. The acquisition includes a large debt component, $20 billion. Let's ask if that debt. There's also studio shutdowns, layoffs, cancellations. Private owners might cut underperforming projects or studios. Maybe that's, who knows? Maybe that's for the best. But to cut away all that bloat, who knows why they went private in the first place? You know, they want to. There'll be some things they mentioned that they wanted to do, like move faster, you know, stuff that is going to be positive. Move faster, more innovation, but there's also going to be things that they have in the back of their mind that maybe they aren't addressing right now. It's man, we could get rid of some of these things that are, this gives us a chance to get rid of some of these projects that are just not working, and you wonder how much that comes in. Who knows what the new owners and there's a whole bunch of stuff on here. How much time? 18 minutes. I'm trying to hurry. Keep it within 20 minutes. Some of the games that they have right now. And it's funny because with all the talk that we had about the ability to take more risks and innovation and stuff like that, ChatGPT goes through the thought line that specific games and franchises, what this privatization means for those that they have already within their portfolio. Live service and multiplayer titles, for example, Apex Legends and EA Sports franchises, those are lower risk revenue generating franchises. They're going to still be prioritized, and maybe receive enhanced support, new content, and expansions. They deliver recurring income. Hopefully those games get better. So the sports games are probably safe. The smaller niche experimental titles and new IPs, those are the most vulnerable to cuts or delays if budgets tighten. Let's just see what's the debt? Like, why? Does EA add to its debt? Yeah, because it's now one big company, so the debt is added on to whatever EA had at the beginning. How much debt versus cash does EA have after this deal? I don't know if that's the greatest question. Maybe it's debt versus equity. The announced take-private deal has $20 billion in debt financing committed by J.P. Morgan, with about $18 billion expected to be funded at closing. The rest is equity, $36 billion, from the investor consortium PIF Silver Lake Affinity, including the rollover of PIF's around 9.9 stake. So post-deal, EA as a private entity is expected to carry about $20 billion of new debt associated with the acquisition. To assess net debt, debt minus cash, or how burdensome $20 billion is, it's useful to look at EA's balance sheet prior to the deal. Simply Wall Street reports that EA had $1.63 billion in cash and short-term investments prior to the deal. The same source lists debt of around $1.88 billion before the deal. This suggests that before the acquisition, EA's net debt, debt minus cash, was modest, around $1.88 billion, which was the debt amount minus the cash. $1.63 billion equals around $0.25 billion under that estimate. So now the net debt is EA's taking on $20 billion in new debt tied to the acquisition. It may still have some of its existing cash if it's not fully used for the transaction, and possibly other pre-existing debt obligations, though many will be restructured or folded into the new debt. If we assume its pre-deal cash is still available, or some portion is, the effective net debt load could be somewhat less than $20 billion. For example, $20 billion, whatever minus whatever cash remains. So post-deal, EA will be heavily leveraged relative to its historical balance sheet, tens of billions in debt compared to just a few billion in cash. Does the consortium have to pay the debt, or does EA? The consortium is now EA, right? Good question. This is one of the trickier parts of leveraged buyouts. Here's how it works in EA's case. Who actually takes on the debt? The $20 billion debt financing committed by J.P. Morgan is not taken on personally by PIF, Silver Lake, or Affinity Partners. Instead, the debt is loaded onto EA itself, the operating company being acquired. That means when the deal closes, EA as a private company will be responsible for servicing the interest and paying down the principal of that $20 billion debt. This is standard in LBO structures. The consortium provides equity, cash investment, for part of the purchase price, while the target company is saddled with the new debt that helped finance its own acquisition. The consortium is contributing $36 billion in equity for EA to play with, in my opinion. That's what I'm adding in. Cash plus PIF's rolled stake. That equity sits beneath the debt and the capital structure, i.e., debt gets paid first from EA's cash flows, and whatever's left belongs to the equity holders. So the debt was the money. So there's a lot of debt there, but money was provided by JP Morgan, remember? The equity holders put in $36 billion. And that's spread out. EA now has to generate enough operating cash flow from FIFA, EA Sports, FC, Madden, Apex Legends, etc. to cover the interest payments on $20 billion of debt. Because interest payments is every so often, every month for the debt. Or maybe year, I don't. If business goes well, the private owners benefit hugely because they leveraged the purchase. Their equity controls a much larger company. If cash flows weaken, the debt burden becomes a real. So, we were talking about, there's all this pressure from the public company. Well, now the private companies, there's going to be pressure from them because there's all that debt. So EA, if cash flow weakens, the debt burden becomes a real risk, and EA, not the investors personally, would be squeezed. In short, EA, the company, owes and pays the debt, not the consortium directly. The investors only risk losing the equity they put in, not being on the hook for the loans. Do you want me to break down roughly how much interest EA have to pay annually on that $20 billion, depending on rates? That would show how heavy the burden really is. Well, not right now. So there we have it. Went a little bit longer than I wanted to, 27 minutes. But, and there's still more questions. The big one is whether the shareholders and the government will approve this. I think that's the big one. I don't know if anything has come out to speak on that. So we'll just see how it goes, but it's an interesting situation. Thanks.